Hi, and welcome to today's training on understanding your personal finances by MoveUp, a nonprofit organization. The goal of today's training is to understand the basics of financial management. You will learn how to build a budget, how to manage your debt, and how to interpret your credit score. This training is brought to you by MoveUp. MoveUp is a nonprofit that empowers underserved minority women by helping them find jobs, succeed in careers, and start small businesses. We offer nonprofit mentoring to help women become financially independent. To find out more, visit us at www.moveuptoday.org. Let's start with the basics of what you should know about your financial health. In order to understand whether you have a good grasp of your financial situation, you should be able to answer some or all of the questions on this page. Do you spend less than your household income each year? How much debt do you have? Are you ready for a financial emergency? Being able to answer questions like this will help you in many ways. Knowing how much you need to spend will help you understand what salary you need to meet your expenses. Being financially educated can also help you uncover unknown expenses in your household and help you create a plan to build long-term wealth. So now that we understand why it's important to be financially educated, let's start with a basic personal finance tool, a budget. A budget is a tool that will help you make critical spending decisions by organizing and planning for various expense categories. A good budget can help you keep your spending on track and uncover ways you can save money. For example, did you realize buying a coffee shop latte every day could be costing you more than $100 a month or more than $1,200 a year? Organizing and thinking about your daily expenses in this way can help you figure out where you want to save money, how to meet your long-term goals, and ensure you are not spending more than you earn. So how do you build a budget? There are 3 steps. First, identify your monthly income. This is all the money coming into your household, including salary, tips, rental income, Social Security, etc. Second, identify what we will call fixed expenses. These are predictable expenses that you know you will have each month and are hard to change quickly. This includes things like your rent or car payments or your mortgage. Third, identify your variable expenses. These are the expenses that you have to estimate and likely change month to month. Think about which of these are a need versus a want. It will help you understand how you regularly spend your money. Remember, your savings each month is your income minus your expenses. Now it's time for a MoveUp pro tip. If you build in a fixed amount to save each month, sort of like a fixed expense, this will be a clear line item in your budget and will help you save. This way, you ensure you're putting some money away each month and you've budgeted for your savings. Let's actually spend some time talking about savings. A good rule of thumb is to have enough money saved that you can pay for 3 months of expenses, including rent, insurance, or tuition. Other savings goals include short-term goals, like saving for down payment on a house or building an emergency fund. Savings will also help you finance long-term dreams and goals, including wealth creation. There are multiple ways to start building your long-term savings. We've already talked about directing a portion of each paycheck to a separate bank account. Other ways include a 401k account. A 401k is a retirement program that your employer may offer you and is a way to build a tax-advantaged savings account that you can access after you are 65, the age that you are allowed to retire. Many employers will offer to match the amount of money you put in with additional money. So for every $10 you put in, your employer will put in a certain amount as well, sometimes up to the same amount that you put in. If your employer offers savings programs like this, make sure you are taking advantage of them. It's like being rewarded for your good saving habits. So we've talked about budgets, and now we've talked a little bit about saving. So let's transition to talking about debt. Debt is very common in the United States, and you will likely take debt out to pay for a house, a car, or an education. It is important to understand how to manage debt and how to avoid high-priced debt. A good practice to manage your debt is to make a list of all your outstanding debts and figure out how much you owe each month in payments towards those debts. Second, prioritize your debt based on the interest rate on each one of those accounts and figure out how to pay the highest priced debt off first. Generally, try to avoid high-priced debt like credit cards. Always try to pay off your credit card each month, as this is one of the most expensive types of debt you can take on, sometimes up to 18% annually. We've now talked about building a budget and managing your debt. Let's move on to bank accounts. More than 25% of Americans do not use or do not have access to traditional banking. Minorities and women are usually underbanked or unbanked. Without a bank account, you may have to use high-priced services like check cashing and payday loans. Traditional banks are a low-cost, more stable alternative and allow you to earn interest on money that is deposited in their institutions as well. Lastly, having a bank account is a key way you will establish your credit score, which we will talk about in a few minutes. You have several banking options available to you. Make sure you choose an option that is accessible to you, makes you feel comfortable enough to ask questions, and does not charge you unnecessary fees like check cashing fees or minimum balance fees or ATM fees. Time for another Move Up pro tip. Try to avoid payday lenders and car title loans at all costs. These are predatory banking options that will charge you a very high interest rate to give you advance money. If you have an emergency and require money, try to consider all other options first, including borrowing from friends or family, before turning to payday lenders. Let's move on to our last topic for this video, understanding your credit score. A credit score is a number in a range of 500 to 900 that tracks your financial history and lets a debtor know how financially healthy you are. A credit score is important because it is the key to you getting any type of debt in the United States, including an apartment rental at times, a student loan, or a car loan. A credit score is determined by a variety of factors, including payment history, length of credit history, and the amounts owed. The big thing is to remember is that you will have to use credit to build credit. Building a pure cash savings that is not banked will not allow you to build a credit history. If you are new to the U.S., talk to a banker or financial advisor about how you can start building your credit history immediately. You can improve or maintain a high credit score by paying your bills on time and paying off debt. Also, try to avoid opening too many new credit cards or always maxing out the credit cards you do have. If you are having trouble managing your debt and your credit card company or your banker can refer you to a credit counselor. You should check your credit at least once a year. There are 3 credit agencies and they will each give you a free copy of your report annually. See the phone numbers and websites for these agencies on this page. So this brings us to the end of today's training on understanding your personal finances. There was a lot of information in today's presentation, so please go back and review the 3 sections we discussed: how to build a budget, how to manage your debt, and how to interpret your credit score. There are multiple free resources to learn more as well, including the Allstate Foundation and Wider Opportunities for Women. Thank you for watching this video. To find other training videos and to learn how Move Up can help you today, visit www.moveuptoday.org.